Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. With Oklo, we're not just talking about some futuristic science project anymore.
Right. This feels different.
It is. We're seeing this massive convergence of advanced nuclear technology meeting, well, just an incredible level of demand.
And that demand is coming from one place in particular?
AI. The power needed to run these new models is the core catalyst.
Which brings us to the headline news, the thing that's really driving all this recent momentum.
The agreement with Meta Platforms.
And this is huge. It's not just a handshake deal or some vague letter of intent, is it?
No, not at all. This is a serious, foundational commitment to build out future power generation. We're talking about a plan for a massive 1.2 gigawatt power campus.
And that's in Pike County, Ohio.
Exactly. And it's explicitly designed to power Meta's data centers in that region, especially their big AI supercluster in New Albany.
Okay, so the structure of this deal is what I find really fascinating. It's a huge signal to the market.
It is, because Meta isn't just a future customer. They're actually providing funding now.
Through a prepayment mechanism.
Right. Think about that. A major customer is essentially giving them working capital up front.
So they're paying today for power they won't get for years. That just shows you how urgent this power need is.
It does two critical things. First, it gives the project a huge amount of certainty. And second, it helps Oklo go out and secure the nuclear fuel they need for Phase 1.
And the timeline here is pretty ambitious.
It is. Phase 1 is targeted to be online as early as 2030.
But the full 1.2 gigawatts? That's a longer-term plan.
That scales up incrementally with a target of 2034. It's a commitment that runs right through the middle of the next decade.
The location is also really key here, isn't it? This land in Pike County.
Deeply strategic. It was formerly owned by the Department of Energy, the DOE.
So you have this clear alignment with national interests. It's almost like a governmental stamp of approval on the site itself.
It absolutely underscores the support for this kind of technology at a federal level.
And then there's the local impact, jobs, tax revenue.
Oh, for sure. Thousands of construction jobs, and then long-term, high-skill jobs to operate the plant.
Huh.
It's a huge injection for Southern Ohio.
Okay, so that's the deal itself. But what does this mean for the broader power market?
Well, this model is kind of revolutionary for the grid. You have a huge energy user like Meta funding its own generation.
And they're adding this new, clean baseload power directly into the PJM interconnection grid.
Exactly. And PJM, for anyone who doesn't know, is one of the biggest grid operators in North America. It covers, 13 states?
So this isn't some small, isolated project. It's adding a gigawatt-scale power source into a critical electricity market.
Right. And that helps everyone in the region, not just Meta. It increases the whole grid's reliability.
So let's pivot a bit to the technology itself, the Oklo moat, so to speak. What makes them different?
It all comes down to their proprietary tech, the Aurora Powerhouse.
Which is a liquid metal-cooled fast reactor. So in simple terms, what's the big advantage there compared to a traditional nuclear plant?
I'd say the number one thing is safety through simplicity.
How so?
The Aurora design uses what are called inherent passive safety features. It has strongly negative reactivity feedback.
Which means?
In essence, if the reactor temperature rises, the laws of physics themselves just naturally cause the power output to drop.
So it regulates itself without needing complex backup systems or someone to flip a switch?
Exactly. Nuclear physics is doing the safety work for you. It's a fundamental design advantage.
But that's a new design, a first-of-a-kind reactor. Proving that to the Nuclear Regulatory Commission, the NRC, can't be easy.
And that is the core execution risk, which we'll get to. But the key is they've already made progress. They were the first advanced reactor company to have their combined license application accepted for review by the NRC.
So they've established a pathway, even if it's a long one.
A long, rigorous pathway, yes.
Yeah.
But they're on it. And then you have the operational advantages.
You mean the refueling cycle?
Or lack thereof. The Aurora is designed to run for 10, maybe even 20 years without refueling.
Wow.
Think of the cost savings. No periodic shutdowns, much simpler logistics. It's a huge maintenance advantage.
And the size. They're tiny compared to traditional plants.
Hundreds of times smaller. It's housed in this A-frame structure, which makes it perfect for putting right next to a data center campus or a remote industrial site.
Okay, and this next part I think is brilliant. They're tackling the biggest public perception problem for nuclear.
The waste issue.
Their waste to value proposition. Can you explain that?
Sure, they're essentially designing their system to run on recycled nuclear fuel, what some people call waste.
So, spent fuel from older reactors.
Exactly. They use a process called pyroprocessing to recover up to 95% of the energy that's still locked inside that's spent fuel.
So they're taking a public liability and turning it into an asset.
Two assets, really. First, energy, and second, a secure long-term fuel supply for themselves. They're much less dependent on, mining new uranium.
So let's talk revenue streams. It's not just about selling power, is it?
No, the primary model is what they call energy as a service, or ESAS.
Long-term contract.
Very long-term. 10 to 20-year contracts with customers like Meta, who need incredibly reliable baseload power. That gives them predictable cash flow, which investors love.
But there's a second piece to it, this subsidiary, Atomic Alchemy.
Right. And this adds a diversified, potentially high-margin revenue stream. They're developing a pilot plant to produce radioisotopes.
For medical and research uses.
Exactly. High-value stuff. And the key here is they're doing it under a special DOE agreement, an OTA.
Another transaction authority.
Which is basically a federal mechanism designed to cut through red tape and get these kinds of advanced technologies to market faster.
So better margins and a faster path to revenue, that's a clever hedge.
It's a very smart part of their business model.
Okay, let's get to the financials. Because for all the exciting tech, this is where you have to be careful.
You have to face it head on. Oklo is a pre-revenue company.
Meaning no significant power sales yet.
Right. Their current income is mostly from R&D and some government contracts. So yes, profitability is negative. They're spending a lot on development.
But the balance sheet is key here. They've avoided taking on tons of long-term debt.
That's the counterbalance. They report having strong cash reserves and a clean balance sheet. That gives them a multi-year runway to get this done. The market sees that negative cash flow as strategic investment.
Buying an option on those future high-margin contracts.
Precisely.
Which leads us right into the risks. Execution is number one.
It has to be. Building any nuclear asset is incredibly capital-intensive.
So there's financing and dilution risk. They're going to need a lot more money to build these things.
Substantial future funding.
Yeah.
And that can mean issuing more stock, which could dilute current shareholders. Or, project costs could run over budget.
You're betting on flawless execution over a very long timeline.
Absolutely. And that brings us to, well, the elephant in the room.
The insider selling.
Yes. The CEO recently sold a pretty significant block of shares. 200,000 shares for over $18 million.
And that reduced his direct ownership by about 12%. That's not nothing.
It's not. And it's something investors absolutely have to watch. Now, you can frame it as profit-taking after a massive run-up in the stock.
Which is fair. The stock has surged.
It's up around 300% year-to-date. But you're right to flag it. A large insider sale at a pre-revenue company is always a signal to monitor very closely.
And yet the market just seemed to absorb that sale and keep going.
The appetite for this story is just off the charts. We've seen these single-day jumps of 14, 15%, often just on positive news from the DOE.
Like the investments in uranium enrichment.
Exactly. Any government headline that supports the nuclear space seems to light a fire under this stock.
From a technical perspective, what are people watching?
A lot of the chatter is about that $90 to $100 psychological level, with support being noted back in the $70 to $80 range.
It's a classic momentum-driven uptrend.
Definitely. So looking ahead, what are the catalysts we should be watching for over the next few months?
Well, there's ongoing policy support. The House Energy Subcommittee is really focused on advanced nuclear right now.
And we should expect more announcements from the DOE, right? Things like HALEU fuel awards.
High-assay, low-enriched uranium, for anyone unfamiliar, that's the specialized fuel a lot of these advanced reactors need.
So DOE award for HALEU would directly de-risk Oklo's fuel supply chain. That would be a major milestone.
And then, of course, company-specific updates, progress with the NRC on the Aurora design, or updates on that radioisotope plant.
And all of this is happening against that powerful macro backdrop.
The AI infrastructure boom just keeps going.
It provides this constant, urgent need for exactly what Oklo is promising to deliver.
So when you put it all together, the investment case here is really about asymmetric upside.
It really is. You have to see it as a multi-year hold. It's like a high beta call option on the future of energy.
High beta meaning high volatility, highly dependent on future events.
Yes, you're making a bet on their execution and on the convergence of this amazing technology with the massive power needs of the AI economy.
And the path forward seems pretty clear. It's all about hitting those milestones and staying aligned with the DOE and the NRC.
Every single regulatory approval, every new contract. The market is going to see that as a major de-risking event. And that's what justifies the high premium the stock has right now.
It's a fascinating story to watch, that's for sure. If you found our analysis useful, remember to subscribe, like, and comment to support our continued work.